your trading candle. So very, very good position. Know how to do it right though. Let me just kind of explain a little detail and nuance with this red candle here. So notice how the red candle has a small top, large bottom wick, and a weak body. Those are the signs that you want to see, right? If this candle looks like a little bit more like this, right, then that's not, excuse me, that's not a celery play. Remember, the candle has to close above the range too, right? So if this candle closes back below the range, that's also not a celery play. So if that happens and you still want to take buys, at this point now you have to wait for that closure to come, right? So once that next closure comes, now you can take buys on the opposite candle and move forward like that. So don't try and rush the celery play. Let it come straight to you, and this play will pay you over time here. So that's the celery play. Let's move along here to the fade. So now we're going to get a little bit more into like a little bit more in-depth, like experience type of ideas and concepts. So again, if you're new to this strategy or just new to trading in general, I would focus mainly on the breakout, the onion, and the celery play to begin with, right? Just build your foundation there, like I built my foundation there. And then, you know, as you get more chart time and experience, that's when you can kind of dive into these positions here, right? So let's talk about the fade. Let's go back to the higher time frame now, and let's talk about it, because again, as I mentioned earlier, everything we do has to correlate with the higher time frame. So our 4-hour candles, they're bullish, right? Now, let's say we already made the move. So let's say we moved up, right? We already took a breakout or an onion or a celery, and we moved up, and this 4-hour candle now has tapped its own target, meaning that was the destination, right? That's where we wanted to see price get to. So now that we've got there, we are at a target. So this line's perfectly into what we call like the target tap concept, or any of our impulse or counter trend trading ideas here, right? So let's just move this up a little bit, and let's say we have officially reached that target. We've officially reached the destination on the 4-hour, and we want to see if we can maybe take a counter trend trade here, right? So here's what I would normally like to see, right? You had the big move up, so obviously these were the buys, right, to take. Maybe we took them off the breakout, or maybe we took it off the onion, and then price has hit its target. So now that price has hit its target, we'll most likely get a pullback, right? So just like this candle hit target, pulled back, right? Now it's coming back up. So we want to see if we can catch a counter trend trade here. So anytime the 4-hour has actually hit its target, we are going to get a little bit more aggressive at this point. So what I typically like to see is the big move up, and then what'll happen is you see these wicks on the bottom here, they will tend to get smaller and smaller. And usually what you'll have is you'll have a wick right here that tapped into the target, which is the 4-hour high, but the 4-hour will never break that high again. It will just start to fluctuate and then maybe melt down, right? So what happens is you see this candle throws a small wick. It attempts to break the highs here, but fails to do it, right? So it fails to break the high there. And now what happens is, maybe if the volume is coming in, we could look for an entry. If the volume isn't here yet, then we're going to wait one more candle, right, and see what this guy tries to do. And a lot of times what you'll notice is you'll notice this little trend line, right, with these bearish candles where it's just getting lower and lower and lower. And now that the volume's in, this is where we want to sneak in a counter trend trade. So what I'm going to be doing is I'm going to be looking at this, and I'm going to say, okay, look, the 4-hour candle has hit its destination. The 1-hour candle or 30-minute candles have moved up 1, 2, 3, 4, 5. They're beginning to get weaker and weaker, as you can tell, between the lower wicks and the bodies, plus the rejections to the top side. With the volume coming in, we will most likely begin to see a push down at that point. So this is where we take an impulse trade, right? So what happens is, what we're going to do is we're going to set a sell stop on the break of that low right there. So as this low begins to break, this is where you want to get into the trade. So maybe price will pop up real quick as it starts to come down. This is where we want to enter. Boom, right there. And that's it. There is no confirmation candle here. There is no, first do this, then do that. You're mainly just looking for the signs of rejection, which I drew out right here. And a lot of times, you'll have you'll have something left to look at. Like, let's just make this one from here to the left. Let's just say that that's a zone. That's what we're going to target, right? We're going to target this trade or target that zone there. And once we get there, we're out. So this isn't a trade where we want to, continue holding forever, because this trade is likely to pull back and then begin to continue firing away, right? So this is a trade where I typically will go break even fairly quickly. And then once the partial at TP is there, the advantage point, I'm closing, right? I'm bagging those profits. So in this case, I would look for maybe like partial TP somewhere, or at least break even as we break through that wick, and then let the rest of it run. And then that's it. You know what I mean? This is an impulse trade. This is a little bit of a harder trade to get into. Let's check the playbook on this trade. Let me see something here. The fade. Where is it? Let me go back one. Playbook. So the fade is out of 18 trades, so we really haven't traded it that much this year. It's got a 94 win rate. So again, if you're picky, if you're calculated, see how this trade is 3 minutes, where like all these trades are 30 or 11 or 10 or 8. This is a 3-minute trade here. So this is one where you want to get in and get out with some profits before the main trend comes back into play, right? Which is most likely going to possibly be bullish. So that is the fade. Again, you're gonna have to see this one a couple times to really begin to get the hang of it. But once you start spotting it over and over again, you will begin to understand it a lot better. So again, this is basically your confirmation, is the idea of these candles not really going anywhere, and then your entry is just sitting right here. The main confirmation on this trade is going to be volume, right? And then obviously target tapped, right? Targets being tapped. Those are your two main confirmations in this trade. Target tapped. Okay, so that is the fade. Now let's move along here and let's go over the inverted celery. So very similar to the celery play, we're going to talk about the inverted celery. So a lot of times, let's go back to this bullish bias here, and let's pretend that the candle has not hit its target yet. It's not reached its destination, but it's ready to go, right? It's ready to go. So normally we'd be looking for an onion, right? So we can set something up, we get a nice clean support form, and then a push up. But what's going to happen here, and this is where we came up with the inverted celery, right, is because we would draw a play out. We would know exactly how the higher time frame wanted to form, exactly how it would want to correlate on the lower time frame. The only issue is sometimes the candle would close like this, right? So let's say it's 9:15 and this candle closes and now it's 9:30, which is again our favorite time to trade. Or let's just say it's London Open or New York Open, right? And you want to look for this onion play to take advantage of the higher time frame and also take advantage of the volume that's coming in. But you don't have a confirmation candle yet, do you? Right? Because in order to have a confirmation candle according to the onion, then you're going to need a bullish closure, right? Oh, let me make that the candle. You're going to need a bullish closure here, right? But unfortunately, during these higher times of volume, you won't get a candle that just closes like a nice onion like that, like this, for you to take the trade on the next candle. So what we want to do is we want to take advantage of our skill set, of our knowledge, of our understanding about the higher time frame, and about our understanding that volume's coming in, right? So what'll tend to happen is I will set a buy stop here. So the main thing I want to look for is, just like the celery play has a very weak body, right? A very steep exhaustion wick to the downside. The steeper, the better, right? Even if this thing broke the lows, I love when price breaks the lows too, because it grabs liquidity, right? So if you want to learn more about liquidity, we have another spot in the course to learn about liquidity. But we know that the sellers are activated here, right? And then what's going to happen again is if we have that little zone in which we're using, right, we're going to notice that, or let me just make it so that it's closing above. It's closing above the zone there. So therefore it's bullish, right? So what we're going to do is I'm going to have a buy stop right on the break of this high, anticipating that if the volume's coming in right now, we're not just going to create support and stop like that, we're going to actually get moving, right? And I don't want to miss that move. I've missed it too many times in the past to learn how to get on top of this one right here. So, by the way, if you're inexperienced in these trades, let them go. Miss the move, watch the move, study the move, right? Get familiar with it. Watch it go on you 100 times, right? Because over that 100 times, you're going to start to learn when you should get in, when you should hold off, and all that good stuff. So at the end of the day, you can have the course, you can have the playbook 3.0, 4.0, 10.0, 50.0, but if you don't have chart time, it's going to keep you stagnant, right? It's going to keep you stuck. So knowledge is not power. Applied knowledge is power. And what we're talking about here is applying the playbook so you can begin to get chart time, and then you can begin to get ahead of yourself as you learn the skill set. So anyway, as we close here, right, and there's high volume coming in, I'm going to have a buy stop. So again, the key components here, the anatomy of the candle is going to be a steep lower wick, a very short upper wick, and a very weak body candle closure. If you see those, plus mixed with high volume, plus mixed with higher time frame direction, this is where we're going to set our buy stop on the break of that high, and we are going to be in these buy positions for price to continue pushing up as the volume comes in, again, to fill that range, to fill that 4-hour wick, and then we're out of there. We're out of there. So that is a little bit more about the inverted celery play. And I think at this point we can move on to some counter trend trades. So I don't know how long this video has been going. It looks like we're a little bit over 35 minutes. So let's wrap this up here. So let's talk about counter trend trades, because let's point out a counter trend trade, right? So this one would also be considered the counter trend trade, which is the fade, right? The inverted celery can also be a little bit of a counter trend trade, right? Let's say that the higher time frame was actually bearish, right, and it hit a target. So let's remove this 4-hour here, and let's pretend that the 4-hour candle is bearish, right? So as you can see, the fade and the inverted celery are very, very similar in a way. They both relate to the target tapped concept, right? And here you would be rejecting out of there, looking for the buys to move up, right? So keep in mind, these are the fade and the inverted celery are two impulse trading ideas, but they're also target tapped concept ideas, right? Very, very, very important. So let's talk about counter trend trades, right? Because again, let me move this back to bullish here. You have price at a target, right? So let's say you have your 4-hour candle looks like this, and then the next candle has moved up, right, and hit the target. So now let's just say we begin to come back, right? So we create structure, we come back down, and then we create support. So now we're looking to buy again here, right? So as we're looking to buy, we don't want to take, let's say we're still got room to go, right? So we don't really want to take the buy because it's a little bit of a tough range. We don't really want to take the sell because we're too bullish at this point, right? So we don't want to see this candle move up on us after taking sells. So we don't really want to snag like the fade or the inverted celery or anything right here. We just want to wait. So what happens is, let me draw your attention over here on the right to the counter trend idea. So what'll happen is, let's just say that this is a resistance level right here, and price will tap into it, or let's say that this is a resistance level more so up here. Excuse me. And we don't want to take these buys because we're too bullish right now, right? We've been moving up for quite some time. We don't really want to take that buy. We want to wait and see if we can either get a pullback, right, and then take more buys. But you have a lot of volume coming in. So instead of us taking like an impulse trade here, once this red candle shows up, right, we are not going to take that trade. Because if we see that red candle, everyone sees that red candle, gang, and they're all counting the bullish ones. They're all saying, hey, 1, 2, 3, 4, what's the chances we keep moving up? And unfortunately, during like rally markets, a lot of times price will break the low, and yeah, it will continue moving bullish, and a lot of sellers will get stopped out trying to call the top a little bit too early. So what we want to do is we want to wait for a little bit of structure, right? So let's say we do break those lows, right? But the candle closes bullish, and this will happen a lot of times. So now the sellers were activated here, and they're about to get stopped out. So what'll tend to happen is price will push up, right? Maybe even break the highs, come back down, and then close below the support. And look, this is where we get involved in this trade now, because if I want you to see the liquidity here, right? So you had sellers getting activated right here on the break of those lows, which we're not going to do, right? Because we haven't fully hit the destination, the target on the 4 hour. So there still could be an opportunity for that 4 hour candle to move up. But, you know, like let's say this one kind of rejected that area, and we've already really tapped that support, that resistance. So, you know, we can go up, but there's really no reason for us to go up, right? So we're going to also wait for sells here. So we're not going to get in here because that right there is going to tap in all the sellers. And then you see this move up, that's going to activate, or that's going to stop them out. So sellers in here on a position that looks very similar. Where's my stuff here? Where's my stuff? So yeah, anyway, sorry. So sellers are going to get activated here on this sell right there. And, you know, their stops are going to be hanging out somewhere around the highs, right? So what will happen is that candle will close. The other one wicks up and stops all those sellers out, right, that had plans of coming down. And then at the same time as that candle, this one wicked up, stopped out sellers. Guess what it also did? It also activated buyers, right? So now you got liquidity being grabbed on both sides, the bottom plus the top here. All the stop losses have been hit, and now price closes bearish here, giving us a confirmation candle and some direction. So anytime you're going to fight the trend or counter trend trade, be sure to wait for this setup right here. So do not take the sells on the break of that low. Do not take the buys on the break of that high. Wait for structure, right? Wait for familiar price action. So once this red candle now closes below what we can call a new support right here, now we have confidence, and we have already now rebroken the daily low. I'm sorry, the 4 hour low. So if you look at the 4 hour, we probably pushed up, and now we're starting to break the lows again. So that's a really good sign for us to begin to move down. So as we wait for this pattern right here, excuse me, all that liquidity plus this rejection plus this closure below, they all become confirmations at that point. And from there, we can wait for our top wick and then begin to take advantage of this selling opportunity. So that is the counter trend trade. That tends to work out a lot. This is something that we've just been seeing really helping us this year. It's kind of like a mini range 2, where you're not waiting for the full range 2 breakout, but you're waiting for the volume. The liquidity is going to tell you a lot, and then, you know, that's our opportunity to enter into the market. Okay, so that is pretty much the playbook. Just wrapping this up, because again, now we're 43 minutes in. So just when I think I'll make a nice short video, it just, the details don't stop flowing here. So keep in mind, gang, this is the profitable trading system, right? This is the one that I've used. I just pulled $60,000 withdrawal out from a live account. I've taken close to $40,000 in prop firm payouts this year, plus made 6 figures last year. So this has really started to come together and become a lot more familiar for me, and I'm sure for many other traders when it comes to that chart time that they're beginning to get in. So last and final thought here is the entries. So sometimes people get entries confused, and I'm just going to make it very simple for you. Let's say this is a candle. We are looking for a sell, right? So we always want to see a top wick, right? And then what's going to happen is I like to enter, as you can see here, off of the break of the current candle or the previous candle. So let me tell you when I would do each one, right? So let's say that this candle is about to flip. I very rarely get in on the flip because, you know, just as easy as it can flip bearish, it can flip back to bullish and back to bearish and back to bullish and stop you out for no reason, right? So just as we're about to flip, I'm going to look and I'm going to say, okay, look, I want to see if I can fill the wick to the left-hand side, right? So I want to be a part of that wick fill. Now, let's say that that is about roughly, so this wick here, let's just say it's 20 pips, right? 20 pips, 15, 20 pips. So I don't want to let those 15, 20 pips go. I want to take advantage of them. So this is a trade that I'm going to enter on the current candle low, because the previous candle low can act as a target, right? Now, let's say another scenario here where that previous candle wick or that previous candle low isn't as steep. So let's just say it's more so right there, right? So in this case, I wouldn't want to enter a pip or two shy of that previous candle just to get in a pip or two early, right? When I get into trades, I want to get in at the best confirmed entry. So in this case, if there's only like a 1 or a 2 pip difference, as opposed to the last example where there was like a 15, 20 pip difference, this is when you don't want to enter on the current and you want to enter on the previous candle for extra confirmation. And again, these 1 or 2 pips are not going to make a big difference in this trade, but I'll tell you what will is if you get tapped in here and then you get stopped out, right? That's going to make a big difference. So anytime that the wick is close to the current candle, I will use the previous candle. Okay. Last thing here too with stop losses, right? So anytime you enter off the previous candle low, you can use the current candle high as your stop loss. Okay. Previous candle entries, you can use current candle stop loss. All right. If we're going to go back to that other example though, where you're going to use the current candle stop. So let's say the wick is down here. We're going to try and get the wick fill, and you're going to use the current candle as your entry. It's always going to be best at that point to use the previous candle high as your stop loss. So listen to me here, right? Current candle entry, use the previous candle stop loss. Previous candle entry, you can use the current candle stop loss. Okay, a little tongue twister. You may want to replay that a few times. But all in all, the rule of thumb for me is any time that I can use the previous candle stop, I will. But if I can't, then I'm going to use that scenario which I just told you. Sometimes it's just too many pips. It's just too much risk up there where you're going to have to use a better stop loss. So, man, I think that's it. I think this is the Playbook 3.0 video. Keep in mind, this is just a Playbook video. There any details that go along with this, I think this was pretty detailed. But any other details, you'll be able to find that in the other topics here on the course. But best of luck to you, gang. Again, going back to what I mentioned earlier, if you can stick to this system, I challenge you to stick to this system, right? If you're not making money yet, or if you're not making the money that you want to yet, stick here, study here, understand this, and apply it. Just say, hey, look, this is the way I'm going to trade moving forward. There's no need to go into another system. There's no need to go into another strategy. I have to stick to one, stay consistent, so I can see and reap the results. So that is the Playbook 3.0 video, my friends. I hope this helps. This is going to be Playbook, or I should say Clubhouse exclusive. And I can't wait to hear some of the feedback off of this video. But best of luck. Watch this a couple times. Study it. Take good notes. And we'll see you guys in the next video. Playbook 4.0 coming in a year. Later, gang.